JB Cycles here with an update on August the 28th. So, has the next leg down in the bear market started? Well, it appears so, but we have to see if we get continuation to the downside here now. Looking back, I had these general trend arrows put in a long time ago, and actually I had the relief rally top right here. So yeah, it was kind of as expected, and we reached the full potential, as I said in the last video. But let's discuss my 1 month cycle, or about 4 week cycle here in gray. And this cycle is in question. Is it still working, or has it changed? The cycle length should be the same, but it may have shifted in time or inverted, and that may be the case. If we, well, here I have the cycle, and often it has a double cycle shape. So if we go to this point and assume it has shifted into this position, we see that works. Well, we can't see these two swings that well up here, but yeah, you see the general pattern, and as well here we also see 1, 2, and the next one here, and we can kind of see it here, up, down, but it was overall a very bullish cycle. And here the next one, it's kind of hard to say exactly where we are here now, but I'll come back to that in the hourly data. So these critical dates, they are tied to the old cycle, but yeah, it may be different. Maybe we are looking for a low a bit into September, and then the critical bullish phase would be more like mid-September and not in the beginning of September. So I still need some more months of data here to confirm that the cycle has changed. So I don't know, but if my scenario is correct, we should be in a general downtrend into October or November. Let's zoom out. So in red I have my 7-year cycle, and yeah, this wave. In red I have the cycle, and yeah, it points down into October, November. So we met resistance here. We tried to find support at this level, but didn't. And now, yeah, I guess we should expect some kind of support here now soon at the 4,000 level. We have this trend line, this one, and the symbolic level 4,000, but it should in the end break. And what to expect here, if we look at this, that would be kind of a double bottom. That's a possible scenario, but it may be a fake double bottom and then go down a bit later, or we could crash down and go to new lows. I have to see about that. Up here in the background I have the 6-month shifted index, and I said that should be acting as resistance, and it did. So over here, let's see, I've shown this earlier. These are cases synchronized at with my 7-year cycle, and I said some of these cases they topped out earlier and had their relief rally earlier than now, but today's action is more similar to the one in 1972, 3, 4. We see those topped out about at the same time. We had the relief rally at the same point, and we should now be heading down. But we should crash down to new lows, but we could try to make some kind of a double low here and try to hold on to that level into early next year perhaps, before we then crash down in the spring and summer and make the final low late in the summer perhaps. So I haven't studied that much all these, how these play out. You know, often I do that a bit too late, like the relief rally. I should have done more research on that before the rally and not at the more towards the end of the rally. But we see we had a very typical bear market rally here. The length was of a very typical length, and now, you know, if I remove these here, I have the more similar one, and they, well, some go straight down, but some need some time to make a lower shoulder here before they give in to the downside. So yeah, the hourly data, couple of weeks since I showed this last time, it was at this point. So I expected a swing high here, but this small dip here prolonged it into here, and as I said, I hate it when we got to get this strong momentum right at the top, because then you can get some unnormal action. And actually, you know, this should have been the swing high, but then we had another push up to the upside. So looking at the purple indicator down here, it was stretched out, not very normal to see. So we had a very prolonged swing to the upside here, and the current situation, if I look at the purple wavelet here, we are at this point, and this wavelet does not look finished. I have a very general projection up here, you know, pointing to this should be a B, C, and then we'll see what's coming after that. But it looks like we need some 2-3 more days to complete this downswing. Bigger picture, monthly data. Here I have the 20 or 21 month shifted index. When we break this shifted index, bad things happen. You see the year 2000, we had actually here we broke down and then had the relief rally. 2008, here we had the relief rally trying to stay above, but then it crashed. But since the financial crisis, we had only very mild bear markets or cycle lows. You know, this was kind of a fake break, the COVID crash. But this time, you know, we're at this critical level. We bounced up, but if we now should go down to new lows, we would break the shifted index. And you know, when looking back 50 or 100 years, well, sometimes it breaks down, but then yeah, it stops there and it consolidates, and then yeah, that it tries to shake out skeletons from the closet, but it can't find anything, and then okay, we're fine, and then we go up. But most cases, when we break this level, it's for a reason, then we flush down. Also, the black line is I think the 42 month moving average, and when we break it, it's often a sign of more to come, like here, like here. But these mild bear markets, they find support at this level, and here. So if we start to break to new lows here, there are several indicators here saying that this looks like a hard landing. So yeah, we'll see. See you in the next one.